going on, people? Luke here from LAGFX. We're back today with a new case study video. In today's case study video, we are going to be going over the XAU USD market. This is the gold to the US dollar. If you are new to the case study videos, it's basically where we cover a specific pair and we fully digest all the information we are provided with, giving you a full top-down analysis. This is obviously a great way for you to get a better understanding on the markets themselves, as well as how I perform my top-down analysis. But on top of that, it gives you guys the opportunity to highlight specific zones and areas so you can go ahead and place profitable positions in the coming weeks, days, and months. As always, if you guys have any questions, any queries regarding the analysis we go through today, please leave them in the comments below. And if you do enjoy the video, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. Now, this video is actually created due to a comment that was left on a Sunday Sessions video just last week, may have been the previous week, by someone called Ramon. So thank you very much for the comment that you left. You were expecting some XAU USD analysis on the Sunday Sessions, however, we did provide it, so I thought, why not perform a full case study video for you today instead? Now, as I mentioned before, if there is anything that you're unsure about throughout this video, please leave them in the comments below, as I get back to everyone in the comments. I'm very responsive. And if you aren't involved in our VIP chats or the Learning Lounge group chat, get yourself involved in there so you don't miss out on any updates throughout the coming days and weeks. Now, with all that being said, let's jump straight into today's case study video. Okay, so for those of you who are new to these case study videos, the first thing I like to do when I perform my top-down analysis is start on the weekly or the monthly timeframes. The reason for this is so we can get a greater understanding on the prevailing trend, and that helps us build our bias when we come to actually place positions and also analyze the markets. You can see here that this market is clearly trading us in a bullish way, and what I will do is I will highlight out the swing points. So we have our lows set here, followed by a high, followed by a higher low, followed by a higher high. As you can see, that's clear bullish structure. Now, with price being in a bullish trend, that tells us that realistically, we should be looking for buy opportunities. Buy opportunities are usually found around demand zones. So our overall bias for this market is to actually see this market continue trading us in a bullish way, and we should be looking to capitalize on bullish opportunities from demand zones that we find. Now, as we go down on timeframes and we start to digest the information, we will notice how price is actually looking to put in a higher time frame corrective wave. So because of that, we could actually look to capitalize in two ways, both in the bearish correction, but also the next higher time frame impulsive wave that follows. Now, the reason why I always start on the weekly and monthly timeframes to gain my bias and to see the prevailing trend is because it is very important that we always trade with the prevailing trend. There is a famous quote within Forex that is, the trend is your friend, and it is very true. We should always be trading with the prevailing trend, the majority traders in the market, as that is going to increase our probability of being successful when we do place positions. So now that we understand the prevailing trend and we understand the overall direction of this market, we can mark out the last protected low in this instance, with it being bullish structure. And the reason why I'm doing this is because if price was to surpass and trade beneath this last protected low, this would tell me that actually this bullish trend has concluded and a new bearish trend is underway. But until that, price is still very much bullish on the higher time frame structure. So I've marked out this last protected low, and the reason why this is a last protected low is because the high it went on to create comes higher than any other high that's been created in this market. The last protected low is always the low that created the highest high, and the last protected high is always the high that created the lowest low in bearish structure. So now that we've marked this out, we have this as an area to be aware of. If price trades below this, our bias will flip and we will be looking for bearish opportunities. Now, as we zoom in, you can see here how price has provided us with three equal highs. This is called a triple top. And what this suggests is that price is struggling to actually break above this and demand is running out in this market. Now, due to that, supply gets introduced via a distribution, which is what's being created here. And what should happen is price should trade lower to grab any remaining demand in order to push price up breaking these last highs that have been created within this market. Now, if we draw a path, you can see that we have a low set, followed by a high, followed by a higher low, followed by a higher high. That's clear bullish structure. That is following the overall bias of this market. Now, obviously, to further investigate and how we can look to capitalize in this market, what we should then be doing is going down on the time frame. So preferably looking at the daily at this point, looking at the most recent structure that price has put in. So we're going back as far as 2020, and we are just looking at the last protected low now from the current structure that we are seeing in this market, which is this one here. Again, why is this the last protected low? This is the last protected low because this low went on to create the highest high. As you can see, this high came higher than the previous two that was set in this market. Now, again, what we can do is mark out this last protected low. And the reason for this is because if price was to trade beneath this, that would tell us and confirm to us that price is actually ready to dig deeper and trade within this area here. Okay, so a break in this low would tell us that price is ready to put in that higher time frame bearish corrective wave. So now that we have zoomed in and we're now looking at the most recent impulsive wave that traded price higher, you can see here how it looks as though price is actually trading us in a bearish way, generating us with lower highs as well as lower lows. Now you'll notice that price has actually traded into this higher time frame demand zone. And what we have seen is price actually trade up and out of this zone, giving us the bullishness we expected. Now, is this bullishness to continue? We don't know. What we do know is that price is trading us in a bearish way at the moment, and we should be looking at areas of supply for anywhere that price could come to trade up and into to set its next lower high within this bearish structure. So what I've gone ahead and done is actually marked out an area of supply. This is a clear order block within the market on the daily timeframes. I've gone ahead and marked that out as an area to be wary of, somewhere that we can see as a point of interest. Keeping everything in mind, this is still considered a bullish market on the higher timeframes. However, we need to acknowledge that price is trading us in a bearish way. What I'm also going to do is mark out this area of supply here as another point of interest and a place that price could come to trade up and into before trading goes lower. And what I'm also going to do is mark out these areas of demand here. So, and the reason why I'm doing this is because these could be areas that price could actually trade down and into before taking that next hike up, breaking this last high that was created in the market. I'm actually going to label these zones for you all, so you can go ahead and you can go on the daily time frames and mark them out for yourself. And then what we'll do is we will further decipher the information we are being delivered with, and we'll find out our bias and how we can tackle this market on the lower time frames. Okay, perfect. So what I'll do is I'll leave the screen up for just a moment, just so you guys can go ahead and obviously take note of these zones and areas and apply them to your own charts on the daily time frames. As I say, it's very important to mark these areas out, as these can interrupt price and actually encourage price to reverse, causing S&D flips. So it's very important that we mark these out, because they can also provide us with trading opportunities. You know, we could look to go long from these demand zones, and we could also look to go short from these supply zones. But what we need to obviously understand now is which direction price is going to take based on the information we have. So if you haven't done already, pause the video now, mark these zones out for yourself, and get straight back to the video with me. Okay, so now that we've marked out those zones, what I've gone ahead and done is actually just zoomed in, just to concentrate more on the most recent impulsive wave and the corrective wave that price has put in so far. So you can see here, as I mentioned earlier, price has actually traded down and into this area of demand. Price has then shown great rejection to the upside and has put in the bullish structure we expected. Demand has been introduced, which obviously causes price to increase in value and for price to trade higher. Now, the reason why I've gone ahead and kept this marked out and this one as well is because these could be areas where supply could be introduced, and that could again give us the S&D flip, generating us with further bearish structure. Could we look to go short from these two zones? Absolutely. But what kind of confirmation will we need in order to get involved in those short positions? Well, what I want to see is for price to actually come to trade up and into one of two supply zones. Once price has traded in, we expect rejection to the downside, supply to be introduced, price to give us an S&D flip. That S&D flip will come via a break of structure. So breaking the last protected low within the bullishness that traded price up and into the supply zone, this would be a breakup structure, as this here is the last protected low, as this went on to create this high, right? Now, once that has happened, we can then expect price to pull back to set its first lower high in the new bearish structure. This is where we would be looking to get involved in those bearish positions, and that's when we can ride price down and into the higher time frame demand zones that we've got marked out here. So this is what our trade may look like if we do look to get involved in some bearish opportunities. If I just add more to this, you can see that this would be the last protected low, as this low created this high. Price would pull back. We would simply get involved from a fractal supply zone that we find from the impulsive wave that broke the structure. So this right here would be the impulsive wave that broke the structure. We find a supply zone within that, just as we have done here and here, and we get involved from there. This allows us to obviously get involved in with a refined entry, meaning we can capitalize on this bearish position exponentially. We'd walk away with a lovely risk to reward ratio of a 1 to 11. That's without applying further restrictions and refining our entry more so, which we could do. Now, if however price doesn't decide to reverse from here, we do also have this zone as well that could give us the bearishness we seek, allowing us to actually capitalize on a bigger swing that trades us down and into those demand zones. Now, you may be wondering, well, why do I think price will deliver us with bearish structure from these? Well, we are seeing price trade us down in a bearish way with this most recent impulsive wave, and as we go up and onto the higher time frames again, we are seeing that this is a common pattern. Yes, we have created a higher high within all of this, but I would look at these as equal highs, and what we're also seeing is price distributing, which is something price does in preparation for a larger down move. So I truly believe this is just part of a higher time frame schematic before price actually does trade us lower into the markets with a longer term bias. So I feel taking advantage of short positions from these zones into these demand zones will just be the beginning of new bearish structure. We'll obviously have confirmation of that as soon as we have a break in this last protected low. What we would then look to be doing is trading price all the way down, and this is where we'd be able to look at this data for any areas of demand that may suggest themselves to us as an area to take profit and for demand to be introduced in order for price to go on to set new highs in this market. Now, if we just scour and have a look through these markets, there are a few areas of demand that stand out for me. What I'll do is I will go ahead and mark these out. So you can see here that I've gone ahead and marked out two areas of demand that come lower than this last protected high, this last protected low. This is just on the basis that price does actually trade beneath this low, which would again confirm further bearish structure. And these are areas at which price may come to reverse from longer term. So if we just go now back to this, I'm going to draw a path out exactly how I feel price may play out in the days, weeks, and months. Now I'm expecting price to put in some bullish structure to trade us into one of two supply zones. Once price puts in that bullishness, I'm then expecting a reversal to the downside. Price may trade into one of these demand zones, which may give us a higher time frame correction within the new bearish structure, but it's not going to be enough to see price trade higher. What will see price trade higher is a penetration of one of two demand zones that I left down here. Supply will be scarce and demand will be introduced, and that should encourage price to trade all the way up to create newer higher highs in the market. Now you can see here that this structure may look a bit peculiar, but what we are seeing is price put in the bullishness we expect to trade into the supply zone. We get involved in the bearish opportunity that trades price all the way down and into one of the demand zones. We close those positions to be safe. Price puts in a corrective wave as demand is introduced. Price then trades higher to find supply from this impulsive wave that traded lower. Price then continues to trade us down into a higher time frame demand zone where demand is introduced, supply is scarce, and then we see price scale all the way up, creating a new higher high. Now, if we go back to the weekly timeframes, you can see how this actually follows the higher time frame structure that we were marking out earlier. So if I just again get my path tool out, mark out the low to the high to the low to the high, to the low, to the high. You can see that that's following clear bullishness. So our lower time frame bias falls in line very well with our higher time frame bias, and that's exactly what we want to see when we are looking to take advantage of these markets. If you are looking to take part in this market this week, what I would do is I would probably go down to the hourly. I would look at the last protected high within this bearish structure, which would be this one here. Once we see a break in that, so price trading above it, I would then say it's safe to then look for bullish opportunities into one of two supply zones, okay? So once price breaks structure, we can expect price to pull back into an area of demand. There's an area of demand here, an order block that's been left over before price then actually goes on to trade us higher up and into the supply zones that we've got marked up above. So we can definitely look to get involved in bullish positions. We just need to wait for a bit more confirmation before we actually do jump in. So you can see here, I'm just going to mark out this area of demand. We would look to get involved in buys there, traded up into the first supply zone that's marked out. I'll be then happy with the profits that are generated. You can see that it would generate us with some brilliant risk to reward ratios. And then I'll prepare for the potential that enough supply is introduced to see price trade lower. If we are then delivered with a breaker structure to the downside, as well as a pullback, valid entry confirmation, I'll then be looking to go short, trading price all the way down and into these higher time frame demand zones here. If enough demand is introduced to see price trade up, it'll be a good job that we exited those sell positions. However, if price trades through these, we can look to just get reintroduced with a refined entry. That's not a problem. But for this coming week, I will definitely be looking to go long in this market, just finding areas of demand to actually trade this market in a bullish way. And again, this falls in line with our higher time frame bias and the higher time frame prevailing trend, which is suggesting to us that this is a bullish market. So by us getting involved in buy positions, we are actually being more safe as we are trading with the majority traders. So if you haven't done already, mark this out as an area of demand and prepare to potentially go long from there, assuming we are delivered with the BOS we need before price pulls back and into that demand zone. But that is actually going to summarize this case study video. I hope you guys have enjoyed. We understand now what the prevailing trend is, the overall bias of the market. We've marked out some key areas for price to reverse from. We understand the footprints that we want to see price put in. It's now just waiting for price to deliver us with that information. I've provided you guys with a brilliant intraday trade that we can look to actually execute in the coming days, assuming price delivers us with the structure we want. Now, as I mentioned earlier, if you guys have any questions or queries regarding the analysis I've gone through today, as well as this case study video, then please leave them in the comments below. And if you have enjoyed, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. Now, with all that being said, thank you guys for watching, and I'll catch you all in the next one.